Hi, this next episode is going to be exciting. Taylor Mobley with Bamboo Insurance, and they're West Coast insurance carrier, MGA, and they're in the property space. So we don't always hear people in the CFO, CRO role, Chief Revenue Officer, Chief Financial Officer, come on these shows because these guys are really busy. And I was able to get Taylor on the show, and he get to talk about why he joined Bamboo, the journey that they went through, and where it's going. So I'm excited to bring this episode to you and enjoy. Hi, welcome to this episode of Founder's Journey. Today we have an exciting guest, Taylor Mobley. How are you, sir?
I'm good, Jeff. I'm good. How are you doing today?
Man, our audience are in for a treat, and I'm gonna do a little intro. So Taylor is a founder of MGA insurance carrier called Bamboo, and they are based out of California. And he was one of the original co-founder of the company. And today he's going to share his story and his journey. And please share with our audience not just the Bamboo story, but also with our audience, how did you end up in insurance? And how was it like in the early days of the journey when you guys just had this idea? And then take us all the way through to the transaction with White Mountain and all the fun things you guys have in plan for us in the next few years as you guys looking to grow aggressively. But thank you for coming on the show, and I'm excited to hear your story. And the mic
Yeah,
is
thanks
yours
for
again.
having me. Excited to share. So, first off, I do want to correct you there. So, I have been around Bamboo for 4 years now, but was not one of the initial founders. So, I joined in 2020, middle of the pandemic, when the Bamboo team launched in 2018. So early on, I think Bamboo had roughly 35 employees or so when I joined as the CFO initially. So a little bit my background, 10 years at Ernst Young, public accounting, bounced around originally from Ohio, spent 3 years overseas in Amsterdam, coming out of the financial crisis when ING had to divest of their insurance business. And then a couple years in Alabama before taking a role at Kemper. Spent 3 years at Kemper before joining John Chu and the Bamboo team in 2020. So that's a little bit my background. Yeah, so
What was that first call like? Did he reach out to you? Did you reach out to him?
yeah, no, the Bamboo team um, had reached a point where they had scaled and the business was off the ground, but we're looking to how do you say this? Bring in some additional, I'll say, horsepower. Myself and our chief insurance officer, Brian Suzuki, started on the same day. You know, we're two folks who had been in the insurance industry for a couple decades each, and it was John's pitch was essentially, look, we think we've got something here. We'd love to bring in a couple more folks to really deepen the bench, supercharge the team for wave two.
At that point, when you joined them, what size were they?
Yeah. Geez, 4 years ago feels like a lifetime. Right now, looking back, but I think Bamboo was roughly 50 million in managed
Mhm.
premium when I joined. We had not acquired our retail agency yet at that point, so it was truly California homeowners dwelling fire, 50 million, largely distributed through our carrier partner channel. We had not aggressively moved into the IA channel yet, or our direct to consumer arm that we have today.
So I won't get back to the IA channel, direct to consumer, and your retail agency. But that first conversation, when he pitched you on, hey, come join this rocket ship, and what was the 3 year, 5 year, 10 year vision that he laid out?
Oh, geez. In those early days, right? Like in as I said, my background was serving large public companies, working at Kemper, a mid-sized public company. Um, I had never really been into the startup space. So jumping into this startup space has been a wild ride. When I think about the pitch and the projections, like you put something on paper and it's a bar chart of managed premium and EBITDA and everything looks up and to the right. And so it's you know, personally there's probably a little bit of, how would I say this? being naive to the roller coaster in the startup world, but also the excitement and the opportunity to build. And what attracted me the most was talking with John and the other co-founders, members of the executive team, just the passion, the excitement. And I was at a point in my career where I was looking to make a change, and was excited about the opportunity to work with a group of people who woke up every day and were just so passionate about what they're building.
So there was no line like we're gonna go dominate the world.
No, no, there were no big financial promises. There were no big. It was, hey, we want you to come be part of this. We're still early on, but we think we've got something. And are you willing to roll up your sleeves and get in and help build? So and that's something I think I've come to learn, that all founders, entrepreneurs are very much that, hey, I'm going to roll up my sleeves. I'm going to get it done myself, and I want it done yesterday. This whole
Mhm.
idea of, well, let's schedule it, let's do it we'll get a meeting together for next week. Like, that just doesn't exist, which is one of the greatest things I think today about Bamboo's culture is, you want to do something great, go do it, and let's do it tomorrow. Let's do it today. Like, don't wait.
That's that's awesome, and that's why I love startup. But I have to go back. When they're talking about California, right? They have 50 million premium in California. And this is a time when you first started with Bamboo that State Farm want to slow down or even shrink in California in property size. Allstate, Farmers, Nationwide pulled out recently, right? And that's a lot of challenge, right? It's one probably top three, top four most challenging property state to grow. What was the sauce that you said, okay, we can do this in California?
Yeah, well, and if I go back a little bit too, when I joined it, the market was very different than it is today, right? And so the Bamboo philosophy, or some of the core tenets, was embracing all things technology. Before insure tech was really the sexy thing that it was for a handful of years. And I know we've kind of moved past, and the whole path to profitability is certainly front of mind for a number of folks. But you know, Bamboo played around the edges, I would say, of all that, but really had three core tenets, and it was embrace technology with everything we do. The executive team had spent decades at large carriers and understand the pitfalls of legacy tech platforms, tech debt, trying to integrate with new technology. It's like so many new opportunities are out there, but how do you integrate with a policy admin system from 1970? Right, you can't, or you can't do it efficiently and quickly. And so that was certainly core to what we were doing. It was omni-channel distribution. That was the second core tenet. And the third was capital efficiency. Again, 20 years ago, having excess capital was, a sign of strength with an insurance organization. Today, it's a drain on your return on equity, pulls your stock price down. So being nimble, having great capital providers, partners in the form of fronting carriers, reinsurers, a reciprocal exchange, etc. That's all kind of key and central to Bamboo's approach, and has been from day one.
You mentioned the the word reinsurance.
Mhm.
The last 2 years, reinsurance market is really, really tough. How does reinsurance in general view California versus we know how they view Florida, right? Like
Yeah.
how do they feel about California?
I think it's and obviously reinsurance is key in our business. I've been on a number of our reinsurance marketing trips, both domestically and internationally. I would tell you our experience is those who have spent the time and understand the California market uh, appreciate what we're doing. They look at our modeling, some of our aggregation management, the technology that we've got in place, and quickly get on board and say, wow, what Bamboo's doing is different, it's innovative, and if you look at our results, they tell you it's working. Those who aren't as informed on the California market, haven't built their own models, haven't gone and driven through different parts of the state to understand what the topography looks like, where the wildfires are occurring. They, in most importantly, where Bamboo's writing business and where Bamboo isn't writing business. they're just blanketly scared of going into the state. So I think there's two pieces to that, right? There's the regulatory aspect, and there's the actual insured risk wildfire aspect that on the regulatory front, we think we've been in the market for a number of years. We have a great relationship with the CDI, and certainly know how to work with them in a productive manner.
It's not the easiest market to work in. So I want to go up a little bit in timeline. When did you guys decide to expand into the indie market?
Sorry, I missed that. When did we? Oh, the independent agent market.
Yeah, the independent agent market, and then the retail market, and
Yeah.
and then the direct market.
So going back to the beginning and kind of the three core tenets, Bamboo is always focused on getting to profitability as quickly as possible. And even when I joined early on in 2020, we were near break even. I wouldn't say we were break even, but we were very close to break even. And part of that's operating with a group of individuals who are hands-on, roll up your sleeve. Like, you need commission statements to go out. Like, the CFO is the one who's figuring out how to get the commission statements out, right? So that's startup life. So going back to our distribution channels, though, in your question, we knew we wanted to be omni-channel. Trying to go direct to consumer from the beginning takes a lot of capital, right? You got to burn your way into the market. And so that was never core to the Bamboo philosophy. What was embracing what we call our carrier partner channel, where we have great relationships with the likes of Allstate and Ivantage, Farmers and Craft Lake, USAA, folks who have embedded distribution, are looking for additional markets to distribute when they are pulling out or don't have a product to fit the customer. And so that's really where we started, scaled to that 50 million managed premium mark, and then looked at the IA space. We like the agency clusters. Great model for us, again, as we keep our costs lean. The agency cluster model allows for some level of oversight, some level of aggregation within those groups, and that's really where we launch next in the California market. And then finally, again, being a property player, we acquired First American Title's retail agency back in the summer of 21. They were looking to get out of the property market. I believe they did a renewal rights deal with Safeco for the PNC business that was on their own paper, and then they had a retail agency with 45 plus carrier appointments, broadly licensed in I think 48 out of 50 states. So we acquired that, the retail agency with all of those appointments, which was a great play because the producers that came with it had relationships with title agents, real estate agents, brokers, etc., across the country, which perfect for being a California homeowners writer to build those direct relationships. So that was really the play. We call it direct to consumer. It's quasi direct to consumer. It's very much point of sale. When somebody's in a real estate transaction, we want to be there. We want to be present. But we're not a mass marketing blitz. We're not spending $1 million a year, let alone $50 million a year on direct to consumer marketing.
A couple of things I noticed when I was preparing for our conversation. I looked up your team, and I think I might have brought before, but you guys have a really good bench, like on the who's who on your leadership team. A lot of deep insurance experience. So you guys did a really good job there putting the team together. If you're looking at, we're going to Q4 of 2024 when we are recording this podcast, right? Mm-hmm. What do you guys think you end up the year at, number-wise?
Loaded question. I would have answered that question prior to January 1st of 24 when we were acquired by White Mountains, or they made a majority investment. So we are now part of a public company. So I don't want to get my hand slapped this early in my relationship with our new parents. So I can't give forward guidance, but I can tell you, we are on a trajectory to double in size. We finished We finished 23, roughly 200 million in managed premium. You can look, the White Mountains quarterly financials has our managed premium that for the first half of the year was roughly 210 million.
Yeah. I remember that day when I saw the news, I sent you a text message. I said, congrats, are you gonna go take a vacation and celebrate?
Yeah,
That
there's
was
a lot of work that went into that, but it's been a good ride for us.
that was a good deal for both sides. White Mountain is a great name in the industry. Okay. If you guys looking forward on future expansions for Bamboo, you don't have to disclose everything if you can, but what are some of the future expansions for Bamboo? Off the call earlier, I asked you about auto and if you want to go into that, or what other states are you guys looking at? Any other products coming out? Thank you for all your support to our channel. Here is a quick word from our sponsor. Please click on the link below in the comment section to sign up for a demo with Track AI.
What if your insurance sales conversations could work harder for you? Meet Track, your AI-powered conversation intelligence partner. Track automatically captures and analyzes every customer interaction, providing instant call summaries, risk analysis, and AI-driven coaching insights. Say goodbye to manual note-taking and hello to more selling time. Track handles the admin work while you handle the revenue. Fully integrated with your favorite platforms. Plus, get custom AI analysis tailored to your unique business needs. Transform your sales team's performance with Track. Visit track.ai today.
Click the link in the description below to schedule a demo with Track today.
You mentioned auto. We've tossed that around. The management team certainly has experience. It's a natural bundle a play, right? When we're doing homeowners and dwelling fire today. As we've reflected, though, it's not at the top of our list today. Not to say we would never do it. It's not at the top of the list. What we are very focused on is expanding into other dislocated markets where penetration is where agents are asking for more capacity. And we feel like we have built-in capacity. So again, we're not going to burn our way in. And the key being our underwriting tools can carry over. And we think we can have a competitive advantage from a data analytical perspective. So that led us to Texas. We are planning to launch a program in Texas in the first quarter. Are very excited, have been reaching out to distribution partners already, getting things teed up, working with fronting carriers, reinsurers to ensure that we've got the appropriate amount of capacity in place. And really excited. We think some of the California aggregation management, real-time aggregation management that we have in place with our technology carries over nicely, along with some new technology to look at historical hailstorms, weather events, to know like, hey, in the past 12 months, there's been 3 hailstorms within these 2.5 kilometers. While you might like the risk, from the initial review, you should send somebody out and have them actually look at the roof before you bind to ensure you're not buying a claim, that type of thing.
There's some big size hail in Texas.
Yes, there is.
When you look at Texas, is DFW the only challenging market, or is there any other market that you feel like there's different type of challenge?
No, I mean, from our standpoint in the diligence we've done, as well as just being in the industry, right? Like you really have 2, maybe you'd argue 3 separate markets in the state. You've got DFW, which is obviously its own animal in and of itself. You've got the coast, very different markets, and then you kind of have everything else, right? In one of the advantages that we see in our structure as an MGA, is being able to have multiple pieces of paper and bring multiple reinsurance towers to the market. And so designing a product that plays better along the coast. So it's not a one size fits all approach, right? We can have a product that plays better along the coast. We can then have another product that is targeted for the DFW area with a separate reinsurance tower and cap buying needs. So That's a little bit of our approach.
California down, Texas down, two of the hardest states. The other two really hard states are Louisiana and Florida. Is that on the roadmap?
Again, I'm certainly not going to say never. It's not something that's at the top of our list. Like right now, we are very focused on our Guidewire implementation. So we are implementing Guidewire full suite in cloud. Excited about that. It'll launch simultaneously with Texas. So we're putting Texas on our new Guidewire platform. So our team is very much heads down on the technology element, launching Texas. If I was a betting man, I would say we're going to stay focused on the Western United States. It's largely where our team comes from, the existing talent. And you mentioned the bench. We do have a great team, and credit John for putting that together. But that's the bread and butter of who we are today, and I think that'll be our focus.
Utah, Arizona next.
Yeah, but both of those states seem right up our alley. Our one physical location for an office is in Utah, so that obviously makes sense. We've got, pushing 50 employees in Utah now, so it would be great to bring a product to the market in what we're calling our home state.
What part of Utah?
We're just south of Salt Lake, Midvale.
Beautiful place. Let's go back for a second and let's talk about Guidewire. When you guys chose to implement them, what was the game changer that they bring to, being a carrier working with Guidewire?
Yeah, well, and it goes back to think about what we want Bamboo to be 2, 3, 4 years from now, right? And as the market turned in California, as we were able to kind of reset and forecast where we want to be, our platform today gets a lot of credit. Folks, agents in the field love it. It's intuitive, it's easy to use, easy to bind a policy. Call it under 3 minutes if you're an experienced agent on the platform. But we wanted to make sure we had the platform that was going to be built for the next generation, that was going to allow us to scale from, call it the 200 million of premium that we had at the end of 23 to $1 billion, $2 billion of premium at some point in the future. And ultimately that led us to Guidewire. We did a robust kind of analysis. What are some of the other, I'll say, out of the box full suite options? We really liked what Guidewire put in front of us, had to offer, and we think, going back to the technology piece, being able to plug in different industry available data sources in technology packages is critical to our model. So take someone like Cape Analytics in their aerial imagery. Like, we want to be able to plug them in. They're a great partner for us today. But if something were to change in the future, we certainly want the optionality to unplug them and plug in somebody else, or layer in another piece of technology. And so we found Guidewire, was going to provide that for us. Obviously, it does all the bells and whistles, has all the bells and whistles for the basic blocking and tackling of policy administration. It was really, what can we do to differentiate ourselves on the underwriting piece, have our own consumer portal, agent portal, and then the data warehouse on the back end that then starts to get into the AI conversation of how are you using data, how are you capitalizing on everything that's at your fingertips.
So we talk about a couple of states that you potentially might go into. What other products do you guys have? I know that you guys have homeowner products. From my memory, you guys have landlord products with Airbnb, or is that right?
We do not have the Airbnb endorsement. We have landlord products, homeowners products. When we go into Texas, we are looking to do a full suite with adding condo and renters. But currently in California, it's just homeowners and dwelling fire product.
Gotcha. Landlord has been a challenging area for the entire industry in the last 3 years to make profits. So I I can see why you guys hold off on it. Is there a plan in the future, near future for California?
Yeah,
I know your
not
agents are
really.
asking for you every day.
Not really. The short-term rental Airbnb market is one that certainly requires a unique specialization. I do think we could capture a large portion of that market in California. It's a question that we get asked frequently. That in condos, right? Everybody, the condo market is challenging. Similar dynamics when you think about the risk at play is very difficult to underwrite. In a condo building, when you're on the second floor, you've got the folks on the third and fourth floor that, as the insurer, you don't know who they are, you haven't made any contact, you don't know how they're living, you haven't seen a picture of their place, right? So it's really challenging to underwrite that risk that's on the second floor with two people above them. Same thing with the Airbnb. It's like the host could be great, but you have no control over who they're renting to, what's happening there. And sure, there's all the damage clauses, etc., but the wear and tear on that house, not that we couldn't figure it out, it hasn't been where we've decided to invest our time and efforts to build out that product.
What about commercial properties?
Yeah, again, there's certainly a natural synergy to property in California, generally speaking. We have found our niche. We're very happy being lean, mean, and kind of exploiting our niche. And I shouldn't say exploiting. That makes it sound like we're trying to take advantage, but we know what we're good at, and we're trying to lean into what we're good at. And we're a small team. Today, we're roughly 150 people. That includes all of our policy advocates in the service center. That includes our 25 producers who are selling Bamboo's policies, within our agency. And now we certainly have some folks offshore that help on the technology side, help on the service side as well. So all in, you might put that at 225 folks between contractors and employees. But the point being, we're not investing in every opportunity that we think, hey, we could go do commercial, we could go do Airbnb. We're trying to be very focused and stay true to kind of founding principles of what we know we're good at.
I have one random question. The name Bamboo, where did it come from?
Yeah, that's a good question. And I'll be honest, I might not be the most qualified since I was not part of the founding team. I know stories I've heard that they looked at over 100 different names. They had some friends of friends who were in kind of the advertising branding space who participated. Typical startup fashion, right? Like, you're not paying anybody anything. You're just, bring over some pizza and some beer and figure out, like, hey, what would be a good name? So I don't have a great answer. I know it's catchy. It's one word. The one word thing I've heard John say was critical in his mind. Yeah. And sorry, I should say we liked it too. I know this because it grows fast and it's sturdy. And when you think of an insurance company, you want something that is sturdy, going to be there. And we like the thought that it would grow fast.
That makes sense. That makes a lot of sense. All right. Well, a year from now, I want to have you come back on the podcast. What are some comfortable goals and uncomfortable goals you have for yourself in the next year?
Yeah, that's a great question. And a year from now, I mean, I'm pretty confident, but I would also say just hopeful we've had a successful Guidewire implementation. We're live in Texas with a strong book that's performing well. I think our California book will continue to perform. I don't have, to be honest, I don't have a ton of concern with where I see the California book. More capacity in the market, continue to grow there. Again, I'm a little hesitant to give financial projections, but I think a successful Guidewire implementation from a qualitative standpoint, a launch in Texas, California continuing to deliver, and always on the lookout. Maybe one that we haven't touched on. We're very focused on technology. AI is certainly front and center in everybody's mind and conversation today. And I think we're true to our form, being very tactical in how we think about implementing AI. I mean, it runs the gamut of what's already been around for 5 years in technically AI versus generative AI. You know, we're going to be very selective. I think there's great use cases across the organization, but it's department specific. So the way the product development, the actuarial group, and underwriting use AI is going to be very different than the way our operations team uses AI, which is different from the way claims uses AI. And so it's not a one size fits all approach. Each of our leaders, including myself, are very focused on what's out there, what's available, what is possible, and then how can we get the most bang for our buck by implementing this within our functions of the organization as a whole.
There goes. I am excited to have you come on this show today, and excited for all of our audience to hear this episode. I hope this episode encouraged more people to reach out to you, to follow you, to connect with you, and also follow Bamboo. So I'm going to collect in intake form later everything I need from you, and then put all the link in the comments for our audience to click on. Thank you, Taylor, for coming on the show.
Thanks, Jeff, for having me. It's been great.
All right. Bye-bye.